Hi, and welcome to this walkthrough. So we will be journalizing for a job order cost system. So we are manufacturing something and we are going to be journalizing the entries related to that. So number 1 says, purchasing glue and wood for a total of $1,000 on account. So we know that glue can't be traced, so that's typically an indirect cost. And wood can typically be traced because it costs enough and it becomes an integral part of our product. So it is a direct cost. But when we're just purchasing it, we don't care. We're just going to put it all into materials. So we don't care if it's direct or indirect. We're just going to put both parts of that to materials. All right, and we bought it on account, so we're going to pay for it later. So that's accounts payable. And it says it's $1,000. So let's go ahead and post that and see how it affects these accounts. So we bought materials, so it's going to go up with the debit. And we bought it on account, so accounts payable will go up with a credit. All right, so that's number 1. Let's look at number 2. Record the transfer of 500 units of part number 1177 with the value of 50 cents each to work in process. So since it's telling us to transfer it to work in process, we know that that was direct costs, because the only thing that goes into work in process is direct costs until we apply our factory overhead to it. So work in process is direct. So we're going to do what it says, which is increase work in process. So work in process increases, and we'll do 500 units times 50 cents, which will be $250. And then we're going to take it out of materials because we took it from our raw materials and we started working on it. That's where we put it into work in process. So materials will be credited. So let's post it and see what that looks like. So our work in process increased by $250 and we took it out of materials, so that decreased by $250. Number 3 says to record the flow of direct labor costs in production in a job order cost system of $600. So direct labor tells me that I am paying employees and they are on the assembly line or they are touching the product because it's direct labor. And everything direct goes to work in process. So work in process will be debited for $600. And we can always assume that we do a wages payable for this. So take a minute and think about this. Normally you would have done wage expense, but we don't expense anything inside the factory because they are all product costs. So they all get assigned to inventory first. So it was direct, so it went to work in process. So let's go increase our work in process by $600, and our wages payable will be increased with a credit of $600. The next one says to record the flow of indirect labor costs in production of $500. So if it's indirect labor costs, then we have to assign it to factory overhead first. Later on, we're going to take it out of factory overhead and put it to work in process, but everything indirect initially goes to factory overhead. So this is indirect labor. So we're going to debit factory overhead. And it's still labor, so we're still going to do wages payable, and it'll be $500. So let's look and see what that looks like in our T accounts. Factory overhead goes up with a debit, and wages payable goes up with a credit. Number 5 says requisition materials for general factory use. This means that we're going to take it out of materials and use it for general factory, which is another word of saying it is indirect. So everything indirect goes to factory overhead. So that would be $100. And we're taking it out of raw materials, and we call that materials for $100. So let's debit factory overhead for $100. And then we will credit materials for $100. So you can see that we're just using up some of those raw materials and we put it into factory overhead. Number 6 says requisition materials into production. This is just another way of saying the same thing that we said in number 2. We said that we transferred something to work in process. This is another way of writing that. We requisition materials into production. we're still going to transfer them out of materials and into work in process. Whenever it says production, you can assume that it's direct. So everything direct goes to work in process. And we're taking them out of raw materials, so we credit materials. And it tells us that it is $200. So let's post that. Work in process just went up by 200. And materials just went down by 200. We just transferred it out of materials and into work in process. Recorded factory depreciation of $600. So normally the entry would be depreciation expense and accumulated depreciation, but not in a factory. In a factory, everything indirect goes to factory overhead. So we'll debit factory overhead instead of doing depreciation expense because we don't expense anything because these are product costs. Factory overhead. And we still do accumulated depreciation. The credit on all these will still look the same as what you're used to. And that would be $600. So factory overhead went up by 600. And accumulated depreciation went up by 600. Remember, accumulated depreciation is just a contra asset account. So it goes up with the credit. Number 8. This is where we're going to allocate factory overhead or apply factory overhead. I'm going to write that down so you can know what we're doing. We're applying factory overhead. That means that we are moving factory overhead to work in process based on a formula. Alright, so what is that formula? That formula will look like this. Estimated factory overhead, which they'll give you, divided by estimated base. And in this case, our base is direct labor hours. It tells us that. So once we do that formula, then we'll take that rate that we just calculated and do it times our actual base, which is our actual direct labor hours. So let's just plug it in. Read through there and find estimated factory overhead. And when you do that, you will see that it says that it estimated that factory overhead cost would be $500. So that's our numerator. And then estimated direct labor hours, it says that it estimated factory overhead cost would be 500 and direct labor hours would be 20. So that's your estimated direct labor hours. So we'll divide that. And 25 is what we call our rate. So now we'll take our rate and we'll multiply our rate times actual direct labor hours. Alright, and if you read through there, it says actual direct labor hours were 30. So when we multiply, this is the amount to apply. In other words, the amount to take out of factory overhead and transfer to work in process. Alright, so we're going to debit work in process to make it go up. By the $750 that we just calculated. And we're going to credit factory overhead because we're applying it out of there. We're applying that factory overhead, so that's going to go down by $750. So let's go see the impact on our T accounts. Work in process just went up by $750. And factory overhead just went down by $750. Alright, so what's left in work in factory overhead right now? Eventually we want it to be 0. But since this was just based on estimates, it didn't get to 0. It actually got to... Why is my... Oh, because I'm hitting the wrong key. Now I know why. Hold on. Equals this plus this plus this minus the credit. So I have $450 left in factory overhead. I was wanting to get that down to 0. So that's what my next step's going to do. I need to get factory overhead down to 0. What can I do to factory overhead to make it be 0? I can credit factory overhead by $450, and that's how I'll close it. So where will I put the other side? Well, I'm going to say that that's immaterial. It's not enough money to worry about. And so I'm just going to close it to cost of goods sold. And you can just memorize that. When you close factory overhead, just assume that it was already sold and close it to cost of goods sold. So I'll be crediting factory overhead for $450, which means I'll need to debit cost of goods sold for $450. So let's go do that. First of all, this was underapplied because I did not take out enough by $450. So let's, oops, that should say $450, not $540. My, okay, underapplied by $450. All right, so now we're going to journalize the entry to close factory overhead at the end of the period. So we need to take out more. So factory overhead will be credited for $450, and the other side of that will be cost of goods sold. So once you figure out what to do to factory overhead, you just do the other side of cost of goods sold. If it was over applied, you would have to credit cost of goods sold. All right, let's go see what that does. Factory overhead just got credited for $450. So now we have 0 there, which we should. And cost of goods sold just got debited for the same $450. All right. So now going to finish our product. So we have completed job number 117, and we're going to assume that all this was 117. So let's just see how much is in work in process right now. We have 250 plus 600 plus 200 plus 750. So right now we have $1,800 in work in process. So that is how much job 117 costs. So it costs us $1,800. So I'm going to say that it has a cost of $1,800. And we're going to transfer that out of work in process and into finished goods because we are finished with it. So finished goods will go up by the $1,800, and we're not working on it anymore, so work in process will be reduced by the same $1,800. So let's look and see what that looks like in a T account. We're going to credit that, and that puts us to a 0 balance in work in process, and we will say that it is all now in finished goods, and we are ready to sell it. So next, let's sell it. So we sold the job for $3,000 on account. So we're going to have 4 entries for this. The first 2 entries are our sales. It says that we sold it for $3,000. So accounts receivable goes up by $3,000. They're going to pay us later. And a revenue account named sales goes up by $3,000. Now we need to account for the movement of our inventory. So it was in finished goods, but after we sold it, it goes away. So we are going to credit finished goods, and we can finally expense it. So you know we've been saying we can't expense anything in here until we sell it. So now it's time to expense it, and we do that through the expense account called cost of goods sold. And that thing cost us $1,800. The cost of the goods that was sold was $1,800. We figured that out in number 10 up here. And so we're going to take out $1,800 and transfer that inventory into the expense. So that's where we have finally expensed it. And that completes our problem. So let me know if you have any questions. Thanks.